Good afternoon, everyone. Thank you for joining us today for our webinar on investing in America's workforce, improving outcomes for workers with disabilities and employers. Next slide, please. My name is Michael Rush, and I'm the Director of the Center for Disability Inclusive Community Development here at the National Disability Institute. Before we get started in our presentation, we do need to go over some housekeeping tips. Next slide, please. Listening to the webinar. The audio for today's meeting can be accessed using computer audio or by calling in by phone. If you select computer audio, please make sure your speakers are turned on or your headphones are plugged in. If you do not have sound capabilities on your computer or prefer to listen by phone, dial 1-929-205-6099 with the meeting code 865-6466-0064. Next slide, please. Great. Captioning. Real-time captioning is provided during the webinar. The captions can be found by clicking on the CC button in your Zoom controls at the bottom of the screen. It's the three dots on the right-hand side. If you do not see the captions after clicking the button, please alert the host via the chat box. And you may also view captions in your browser at streamtext.net/player?event=NDI. But again, if you do not see the captions, you can put a note in the chat box and send it to the NDI webinars host, and they will be able to assist you. Next slide, please. Submitting questions. Please use the Q&A box to submit any questions you have during the webinar, and we will direct them accordingly. If your question is not answered during the webinar, or you're listening by phone and not logged in, you can email those questions to Hope Price at hprice@ndi-inc.org. Technical assistance. If you experience any technical difficulties during the webinar, please use the chat box to send a message to the NDI host, or again, email them to Hope Price at hprice@ndi-inc.org. Please note that this webinar is being recorded, and the materials will be placed on the National Disability Institute website at nationaldisabilityinstitute.org/resources/webinars. The materials will be available in 1 week, as well as the recording on our website. Next slide. Now that we've gotten through the housekeeping tips, this is what we're going to cover today. We're going to provide an overview of the Center for Disability Inclusive Community Development for those of you who may not be familiar with it. Then we'll go into our special guest and our speaker, Stuart Andreessen, who's with us today, and I'll introduce him in just a minute. But it's going to share information on investing in America's workforce, improving outcomes for workers with disabilities and employers. This webinar will share strategies for creating collaborations that promote inclusive community and workforce development to really advance economic stability for LMI workers with and without disabilities. There also will be a discussion about linking workforce development opportunities to community reinvestment opportunities as well. And then we'll have time for Q&A, and several of you submitted questions via our virtual book club, via LinkedIn. So thank you so much for submitting those questions, and we will be sure to have those addressed during today's presentation as well. Next slide, please. So for those of you who are familiar and new to the National Disability Institute, the National Disability Institute is a national nonprofit organization dedicated to building a better economic future for people with disabilities. The National Disability Institute is the first national organization committed exclusively to championing economic empowerment, financial education, asset development, and financial stability for all persons with disabilities. NDI affects change through public education, policy development, training, technical assistance, and innovative initiatives. To learn more about the National Disability Institute, please go to nationaldisabilityinstitute.org. So a year and a half ago at National Disability Institute, based on the needs and the feedback from the community, we created the Center for Disability Inclusive Community Development that's managed by National Disability Institute, and it's working to build the awareness that people with disabilities are part of all communities, and the needs of the disability community needs to be a part of all or be a part of community development activities. Next slide. When we look at disability inclusive community development, again, it's assuring that all, including people with disabilities, are included in activities that promote the well-being of a community. This may include enhancing affordable housing, workforce development, and building the financial knowledge of how low and moderate income individuals with and without disabilities can access these different services. We also believe that an inclusive community community development approach assures that the well-being of all is the focus. You can learn more about the Center for Disability Inclusive Community Development by going to nationaldisabilityinstitute.org and under click on Disability Inclusive Community Development. So with that, we want to make sure to have a bulk of the time to be able to hear from our special guest and our presenter today. We're very fortunate to have Stuart Andreessen with us, who's the Director of the Center for Workforce and Economic Opportunity at the Federal Reserve Bank of Atlanta. In his role, he conducts research and works across the country to support Federal Reserve and partner organization efforts in workforce development, the labor market, and economic opportunities for low and moderate income workers. You all are in for a real treat as Stuart shares with us more information on investing in America's workforce, as well as strategies and ideas that we can take back within our organization. With that, Stuart, I'll turn it over to you.
Well, thanks so much for having me today. I'm happy to be here. I'm a little bit sad that we don't have some way to be in person, but I also imagine that we're going to get to meet people that we wouldn't get to meet if we were in person, just because of how far away virtual events can travel and how inclusive we can be with virtual events. So I'm happy to be here, but I want to stress something today. I'm going to give a bit of a presentation, but I really hope that today can be a discussion. While it'll happen virtually, over the last year, I have found that some of the ways that we have to communicate through webinars are really great. And I want to commit to a couple of things. Michael said at the front end that if you don't get your question answered, follow up with Hope. And I hope that you do. My contact information will be here as well. And please feel free to follow up with me or with Hope. I want to get to your questions as long as I can help find an answer. We started a webinar series several months ago, and we wanted to make sure that we could get to people's questions. So if something comes up, please reach out, and we'll do whatever we can to find answers. It'll be we're happy to at the Fed, happy to try and help find answers. So please go ahead and reach out. Let's go ahead and go to the next slide. I just want to talk a little bit about what we do. My idea for today is that we're going to go through a number of things. You'll hear something that you hear basically from anyone who speaks from the Fed, a standard disclaimer. I'll give a little bit of an introduction to the Federal Reserve, especially our work in workforce development, which is relatively new. Just talk about what we see workforce development as and how we see investment in that as a critical piece. Some of the challenges that have been around for both the longer term, but also kind of coming out of the pandemic, strategies and opportunities for all of that as well. We'll talk a little bit about investment. We'll look at defining what the WIOA is, what some of the responses are. And then finally, we'll end at a point where we'll link some of the things with workforce development to the Community Reinvestment Act. And then we'll get into some discussion. I would like to just go ahead and go to the next slide, if we could, and say that the views today are those of me. They don't necessarily represent those of the Federal Reserve Bank of Atlanta or the Federal Reserve System. The presentation is really for information. It's not supposed to be used as legal advice. It's information only. Let's go ahead and go to the next slide. A few things on this. The Federal Reserve is the central bank of the United States. We do a number of things. We do a lot of the things that you read about the Federal Reserve doing in the newspaper. We conduct the nation's monetary policy. We have a dual mandate, which is really to pursue full employment and stable prices. That's what you'll hear Federal Reserve staff talk about as the dual mandate. Pursuing full employment and stable prices. Stable prices, we have a strong definition of. It's inflation that's about 2%. Full employment's a little bit less difficult. We don't have as clear of a definition of what that is. So we take that pretty seriously. We look to do through our work, both as a monetary policymaker, but as a research institution and a convener of organizations, doing everything that we can to help engage people in work. We believe that doing those two things help make the national economy healthy and ideally inclusive as well. We do a number of other things as well. We're responsible for supervising and regulating banks and financial institutions to make sure that they're safe and sound. We maintain the stability of the financial system, monitor risk, and see what's happening in financial markets. And we provide some financial services to the U.S. government. And we play a major role in operating the nation's payment systems. Those are things like direct deposit. We provide a lot of the infrastructure behind that. Let's go ahead and go to the next slide, where I want to talk about basically the two sister organizations that we have, for lack of a better term. The FDIC, which your financial institution may be FDIC insured. It provides insurance for deposits in banks. It also regulates some banks as well. And the Office of the Comptroller of the Currency, which charters and regulates and supervises national banks and federal savings associations. It's just so you know, it's an independent bureau within the Department of Treasury. The idea is that they really work to make sure that the national banks are doing many of the same things, provide many of the same regulatory roles that we do for different organizations, focused on some of the largest banks in the country. Let's go ahead and go to the next slide. One of the things that's different about the system that we have at the Federal Reserve is that it's a federated system. So there are 12 Federal Reserve districts. The map that you see will let you know which Federal Reserve district you're a part of. The districts have a long history. The Federal Reserve System is a little bit over 100 years old. The boundaries were drawn up for a number of different reasons that, over 100 years ago. Some of it was related to where population lived, which is why some of the Western districts are quite large. There's lore about why some states are split in half. And as you can see, Missouri has a Federal Reserve headquarters in St. Louis and in Kansas City. There was some thought that maybe that was to help make sure that there were enough votes to get get the system through, but it's just a legend. As a federated system, we're technically we are a system, but we're technically 12 different organizations that come together to make monetary policy. We are all governed by the Board of Governors in Washington, D.C. The reserve banks, those 12 banks, are not technically part of the federal government. The Board of Governors is part of the federal government. We're overseen by the Board of Governors and by Congress. Like I mentioned, we're responsible kind of in its broadest senses for monetary policy, supervision of banks, and the payment systems in the United States. But sometimes overlooked is that there's a community development function at all of these banks as well. We focus largely on making sure that there's a better understanding of the resources and processes and resources and processes that support low and moderate income communities, but also monitoring the challenges that low and moderate income communities face. That has been in a number of different realms: in housing, in small business, in access to credit, access to capital, but also increasingly since the recession, a focus on workforce development, skill building, and access to employment. Can we go to the next slide, please? So you know, the work in workforce development started coming out of the last recession. As we came out of the Great Recession, we saw that there were really kind of divergent pathways for workers. The system started to monitor this through the community development functions to just understand what was happening. As we spend the bulk of our time thinking about workers that make below median wage, usually 80% or less than median wage, we started to see that they were not experiencing recovery from the recession in the same way that other workers were. This tracked in many ways in the same trends that you hear about kind of broadly about the labor market and the future of work, that we're entering a skills-based economy. That was a huge kind of shift. There was less middle skill work, less easily accessible work, and that increasingly the amount of education that you were able to obtain dictated your labor market outcomes. So this slide just goes over some of the things that had happened in 2017. And so I've been at the Federal Reserve about 7 years, and in 2017, we launched the Center for Workforce and Economic Opportunity, which aims to be a national hub for the work that we're doing on workforce development. The center, in its broadest sense, while we work nationally, we also just see ourselves as part of being a bridge. The Federal Reserve as a system, as a research institution, we've got a lot of information and analytics happening, and we aim to be at the center, kind of a bridge to the work that's happening on the ground to support workers to that analytics. And we also see it as a two-way bridge. We want to learn from what's happening on the ground, bring that back, and help it inform our research. We've long thought about what's happening in the labor market, but we are now looking to really focus on some of the challenges around inclusivity. I want to go back to that dual mandate. We know that if we're not inclusive of workers who have had challenges, who have not been able to get the skills and opportunities that others have, we're not doing our job as an institution to make sure that we're supporting growth. If people who could do more can't find the right work, can't find the right skills or supports beyond skill development, we're not meeting our job in promoting full employment. One of the things that's really exciting is the link to our dual mandate and this work, because we're able to focus on inclusivity, and we understand, our leadership understands that it's important to engage all of the country's human capital so that we have as much national growth as we can have. I'm gonna talk today a lot about work that came out of the Investing in America's Workforce Initiative, which is still ongoing. It launched in 2017. And I'll also just talk a little bit about where things are today. But there is a book available. We did the book club and there were a few chapters, but there's a 3-volume book called Investing in America's Workforce, which you can get at investinwork.org. We would be happy to send out hard copies, but because of the pandemic, we can't ship for the next few months until we have access back to our facilities to be able to do that. But there's a request form and we'll fill those when we're able to. The whole book is available online for free, both downloadable by chapter, but also by whole volume. So I encourage you to read it. We hope that you'll read it cover to cover, but we also hope that you'll use it as a reference document, where if there's something that you're interested in, you may be able to look at it. We have 3 different volumes: one on investing in workers, one on investing in work, which covers topics like the links to economic development, rural development, how we promote job quality, and finally, how to invest in the systems that connect people to jobs. Let's go ahead and go to the next slide. I'm maybe a little bit ahead of myself because I haven't talked about what we kind of really think workforce development is. We see the workforce development system as the system that trains and educates and provides social services, including things like supports, childcare, transportation to working age individuals that help them succeed in the labor force, and at the same time meet the needs that employers have for skills and talent and the work that the workers that they need to have. That actually comes from an article called Engaging Workforce Development, a framework for meeting CRA obligations, that was written by colleagues of mine at the Dallas and Kansas City Fed. Let's go ahead and go to the next slide. So you've heard me now mention the Investing in America's Workforce Initiative, and I'll pause for a minute and just tell you a little bit about what it was. We saw it as an opportunity to really kind of pull together the whole system to work on a couple of different things. Through our work, we had seen, before this initiative, we'd seen kind of long-term public declines in funding, some disengagement in a very fragmented system in workforce development. And we wanted to help reframe that and say, like we saw that investing in people, investing in the work that people do is critical to growth. And we wanted to bring an investment mind frame to workforce development. So the entire Federal Reserve System, the Board of Governors and the 12 banks, partnered with the Heldrich Center for Workforce Development at Rutgers University, the Ray Marshall Center for the Study of Human Resources at the University of Texas, and the Upjohn Institute for Employment Research, which is in Kalamazoo, Michigan, to do a number of things. Number one, we wanted to understand what was happening regionally in workforce development and the approaches that communities were taking to investing in workforce development. We held over 50 listening sessions across the country. We held a national conference in Austin, Texas in 2017, which is actually where we committed to and launched the Center for Workforce and Economic Opportunity. And we continued to do that because we learned so much. So we continued listening sessions and special topic exploration into 2018. We launched the book in 2018, continued to roll out the book in 2019. Today we continue to use the book. I will say that one of the things that has really changed our world is the pandemic. I'll talk a little bit about that, but we actually think that a lot of the ideas still hold from today. We've done targeted outreach to bankers, to bank examiners, to practitioners, to state, local, and federal government. We've found new partnerships with academics and kind of started to explore new research questions that we find. And then also just with business owners and employers, those have been critical to us. Let's go ahead and go to the next slide. So here are 3 kind of looks at the book. I will say that it's a lot. If you read it all, please let me know. I would love to add you to the list of people that I know that have read all of it. We've got, we had contributions from over 100 practitioners and scholars and policymakers in about 75 chapters in the 3 books. We told all of the authors that we wanted to think about a couple of things. We wanted to know how better investment frameworks, so not thinking of making a grant to a training program as just a grant or just kind of a lost amount of money, but what were the returns? We wanted people to really start to be able to dictate how they were supporting better outcomes in economic growth and economic opportunity. So we wanted to think about what the return on investment was to all of these things, whether it was from a government making a grant, whether it was from a business that was making an investment in its frontline workers, or whether it was from someone that was taking out a loan. We wanted people to think about how they were making those choices. We told all the authors to think about how they could frame workforce development as an investment and what it would mean if we thought of all of our investments in workforce development as just that. Let's go ahead and go to the next slide. So it started though, we started with an idea of things that we wanted to think about in the book, but we wanted to know what was happening on the ground. So we held listening sessions across the country. This was one of the great things about getting to work with colleagues across the Federal Reserve System, is that we were able to have conversations in large cities like Atlanta and in smaller places like Rochester, in rural areas, including North Mississippi. We were, and in the Delta, we visited over 32 states. We talked with over 1,000 workforce development leaders, and we found out a number of different things. Let's go ahead and go to the next slide. There is, and I'll also send a link directly to the report that came just from those listening sessions. But here were some of the challenges that we heard about. We continued to hear about skills gaps, that the economy was changing and that there were new skills that were needed that workers needed to find ways to get. These are both workers that were just entering the labor market and maybe didn't come out with all the skills that they needed from going to college or to post-secondary training, but also workers that have been in the labor market for some time. So we knew that there was a need to find ways to upskill all workers and to make lifelong learning a reality. But we also knew that there were a lot of non-skill related barriers. Addiction, incarceration, childcare, transportation, housing were all real challenges. We've found year after year that housing and transportation are big challenges for workers, that they may live somewhere where there's not the right job opportunities for them. We also found things that it's really difficult to figure out some of the cyclical or circular, really, relationships between housing and workforce development and employment. You know, we often say you can't think about affordable housing if you don't have enough money to pay for housing. But at the same time, we also know that people weren't able to get connected to work. We heard this, that people without stable addresses were not able to get to work. They were screened out of automated resume systems because they didn't have an address. Homelessness was a huge challenge for connecting people to work. In the book, one of the other things that we actually explored, because we heard about, though, relevant to this group, is just some of the challenges that workers with disabilities faced in connecting to work. That's been a challenge both in what's happened long term, but also as we've seen what's happened over the pandemic. We know that there have been big declines, near 10% drops in the employment to population ratios of workers with disabilities that don't necessarily map exactly the same as what we've seen other segments of the population experience between 2019 and 2020. Now, these are early data. You know, it's hard to say exactly what the long-term effects of the pandemic are going to be on workers with disabilities or workers overall, because we're still in it. You know, I'm hopeful that we're getting near some of the end of some of the challenges, but there's still some time to see what happens. So we need to understand that it's still an evolving situation. But data has just been released that suggests that workers with disabilities really faced a lot of challenges in the pandemic. I think that one of the interesting layers, or things that we need to, maybe interesting is not the right word, but things that we really need to think about in the pandemic is the number of people who may be coming with coming back to work with new challenges related to the side effects or the longer term effects of having gotten COVID. Something that I'd love to learn more about, potentially you all have been seeing. But also longer term, the availability of quality jobs and jobs that paid enough and met the needs that workers had was a challenge. The pandemic has heightened this. We know that workers that were in frontline jobs and lower paying jobs, even in industries that were not particularly affected by the economy, were much more likely to face disruption and challenges in their work. We need to continue to think about the quality of available jobs. Let's go ahead and go to the next slide, please. And you know, like I already mentioned, COVID affected lower wage frontline workers much more significantly. Automation sped up. You know, we are here on a virtual meeting. Were we in person, there'd be a lot of kind of supportive work that would be supported by us in being in a virtual meeting, whether it be facilities or catering or many of the other things that come with in-person meetings. And we've had to think about how we substitute technology and automation for some of that in-person work, and it'll maybe come back some, but our ability to work in a completely different way has really changed. I recently heard an academic suggest that the pandemic has sped up the future of work and work from home trends by 25 years. Now I won't venture a guess if 25 is exactly right, but it certainly sped things up. I'll just say that you can check out some of these trends on a tool that we created called the Unemployment Claims Monitor that tracks not only the overall number of people that have filed for unemployment, but it also sees what's happening with gig workers and workers that are not traditionally covered by unemployment due to the new unemployment programs that came out of the CARES Act and subsequent legislation. So we've tracked that. We've tracked people that have exhausted their benefits and are now on long-term unemployment compensation. We've tracked the demographics. We know that women, minorities, particularly Blacks and African Americans, have experienced a disproportionate amount of layoffs, just as tracked by the unemployment insurance claims that have come through. We've tracked it by industry and ethnicity. You can look at the national data, but you can also look at state level data. So I encourage you to visit that tool to see what's happening. If we could go to the next slide, please. But we also know that there are some promising strategies. The opportunities to link workforce development and economic development are critical. Work-based learning, apprenticeships are wonderful programs that allow people to start earning income, build relationships, learn on the job habits and the skills that they need, and earn some money while they're in that training. Increasing employer sponsored training for incumbent workers is a real promising opportunity. And we've also seen better coordination among providers and funders as a promising practice. We've also seen that some employers have really been able to realize that there's competitive advantage in having better quality jobs. Colleagues at the Kansas City Fed looked at even jobs that we think of as intrinsically lower pay, working at gas stations, and seeing that companies like Quick Trip have been able to have higher customer service and better outcomes by doing things like guaranteeing their workers full-time and stable full-time hours and stable schedules so that they can build their life around that work. They've seen great retention and loyalty to their companies and better productivity. Let's go ahead and go to the next slide. And there are opportunities for investment. It might be in intermediaries or in early childhood education, in infrastructure. Investments in infrastructure, not only to help people better access jobs, but actually also to create jobs. There's great opportunities there. Support services, but also other things that help people build their own life. Investments in entrepreneurship, small business, and social enterprise. And I mentioned intermediaries, but I also want to say that that's both doing training, but also to help actually kind of broker connections between employers and employees. Let's go to the next slide, please. But to help make it more investable, to help attract more investment, whether it's from philanthropy, government, is that we need to find ways to make sure that we're not disadvantaging workers compared to computers. So we need to think of workers as assets. They're not expenses. They help drive companies. If you were to look at the balance sheet of some of the largest companies in the world, you wouldn't see the highly competent, incredibly well educated and capable workforces that they have. You'd see things on their balance sheets like the computers that they own. But there's more there, and the workers are critical to firms. But also there need to be ways to maximize the efficiency and show the outcomes to help better tell the story of what workforce development does. And there's some need for new financial products. In follow-up to this, the Atlanta Fed has been involved in a project with a number of partners, including the U.S. Chamber of Commerce, called Talent Finance, that has looked at how we can restructure financial products that help connect people to good jobs, help provide protection from job loss and the like. And there are opportunities to have better intermediary organizations that help philanthropy, help connect resources. Let's go ahead and go to the next slide, please. We need to think, and in telling that story, it's both short-term and long-term. We need to rethink return on investment and include longer-term investments in those. It's not okay to just think about where someone is 1 year from somewhere, and we need to standardize metrics. We heard from providers over and over about how difficult it was to manage even 2 federal grants that might be from different departments with completely different outcomes and administrative data that they would want collected. Can we go ahead and go to the next slide, please? And so the last thing that I'll say is that there's been some real hope, and for the last several years, efforts at the federal level to try and do some of this coordination. Now it's up for reauthorization. So as we think about the last few years about what's worked and where there's opportunities, we can think about how we can make suggestions in that next authorization of the WIOA. It was a big reform that led to supporting regional partnerships, and I imagine that that'll happen in the future too. So let's go ahead and go to the next slide. And so finally, I'll say that one of the other reasons that we thought about the IAW initiative was that there were potential links to the Community Reinvestment Act, which is a law passed in 1977, which encourages banks to meet the credit needs of the communities that they're licensed to serve. So that means if you live in a particular neighborhood and make your deposits at a bank, they should be expected to offer you the financial services that they would offer to any of their customers. It was particularly a response to redlining. And that included, and so the thought behind the law was that there needed to be encouragements to ensure that low and moderate income neighborhoods that made deposits had access to the same services and products that were available elsewhere. Always consistent with the safe and sound practices that we expect of banks. So just keep that in mind. I'm not going to show today, but there's in the slides when they're presented a video that gives a longer history and an overview of the CRA. Let's go ahead and go to the next slide. Workforce development has several links to the CRA, which focuses pretty specifically on affordable housing. I talked about those relationships already. It's also, the CRA encourages activities that revitalize or stabilize low and moderate income people in areas, and certainly connecting them to better opportunities and work is critical. Same with activities that promote economic development. Improving the skills of a community certainly makes it a more attractive place for investment. And there's opportunities to invest in community services, which are, we already heard, are critical to connecting people to work. There was also in 2017, clarification that workforce development and job placement and supports are specifically some of those things. So workforce development is seen as closely related to the CRA. If we can go ahead and go to the next slide, please. And so there are a number of ways that banks could encourage in workforce development. They can offer some of the financial education programs that they have long done that for. They can provide space. They could be involved in workforce development and some of the mentoring and coaching work. They can help kind of leverage existing sector strategies. So training programs that help certain sectors, banks could be a part of. Certainly, there's a number of actions. Let's go ahead and go to the next slide, please. And so there's also a number of benefits. So not only do these activities help the banks comply with the CRA, but they might also actually help the banks overall. Improving financial stability, increasing incomes of these of low and moderate income communities and individuals helps them. They might get some more, a stronger customer base, expand their customer base, build new pipelines for communities. We've actually seen workforce development programs like BankWorks specifically focus on training for the banking sector. It likely helps the banks understand the needs of local businesses and potentially some of their business customers. And it helps build social capital. Let's go ahead and go to the next slide. So I will say that the workforce development landscape is really evolving. There's been a lot of changes. It will continue to evolve. There's legislation up for reauthorization. The pandemic has been a huge kind of unexpected change for everyone in workforce development. We had such job disruption over the last year that some of the services have never been more in demand than they were in the last year. There's opportunities for banks to engage in all different markets. And there's a number of tools that can help banks understand and build connections. I mentioned the paper that my colleagues wrote, which is specifically kind of a how-to guide for workforce development agencies to engage with banks and for banks to engage with workforce development communities. And I encourage you, if you don't know your local Federal Reserve contact, reach out. And if you need help finding that person, I'd be happy to help you find that person too. I believe this is my last slide. Let's go ahead and check to the next one, which will have my contact information. Please feel free to reach out to me. And I'm happy to pause. I think that I'm going to turn it to Michael, and we're going to have a little bit of a discussion.
Great, thank you, Stuart. Yes, Michael Morse is up, and he's going to moderate the Q&A portion. So Michael, turn it over to you.
Thank you, Stuart. Thank you, Michael. Many questions, and let's just dive right in. First question, Stuart, what suggestions do you have for workforce development programs on how to build relationships with financial institutions?
Well, there's There's a few. I mean, I would say if you're let's call you whether you're a workforce development organization or you're a worker serving organization, or you provide some type of support. I would start with just reaching out, and you're probably a customer of a bank just for your organization, whether it's payroll, all of the things that come with running an organization. Start with your banking relationship that you have. Think about doing a little bit of work to look at the relationships that they have and the areas that you might see other bankers showing up in the community. There's probably good opportunities to connect with civically minded bankers through things like chambers of commerce, economic development organizations. And I would say that to the extent that you can start at places like that, it's going to help open up conversations and help you find the right people that are really interested in finding better connections to the workforce development world or the nonprofit world.
Okay, let me go to a second question. It's in your book, and you mentioned it in your slides. The dual mandate to the Federal Reserve System to achieve price stability and to foster maximum employment. The price stability gets the headlines. It's certainly been a subject of great media attention, seems to have significant impact on the stock market. Why is there so little discussion of this second mandate and the whole purpose of your center to foster maximum employment? And how do we get it more visible among the Federal Reserve discussions publicly and also by the other regulators, OCC and FDIC?
Well, I think that one of the reasons that inflation in particular gets so much attention is that it's pretty easy. We have a defined goal, and so it's easy to measure whether we're on track for that, whether we're off a little bit or we're off a lot. Full employment's a lot harder, and I can tell you that, again, this is speaking for myself, but I look across the Federal Reserve System, and if you ask 20 different economists, you'd probably get 20 different answers about what full employment actually meant. Even if you just asked for a number of an unemployment rate, you'd probably get 20 different answers. And you can see from a number of the releases from the FOMC committee that the projections are different across all of the banks, which is one of the strengths of the federated system of the Federal Reserve, is that we have different views of what all of that is, and there's not as clear of a definition. There has been reporting recently that in terms of actions of the FOMC, there's been a lot of focus on making sure that we don't skew too far into worrying about inflation. You can see from the statements that have come from leadership that we're very much interested in making sure that we actually hit full employment. So I think that I've been here a number of years, and again, these are not decisions that I'm making, but I think that there's never been a greater focus on ensuring that we engage workers fully. Now, I will say that, you can think of the work that we do on full employment as, yes, partially the monetary policy that we set, but I really think that it's more. I think that it's through our community development work. I think it's through our research that we understand what works and what doesn't. There's only so much that the Federal Reserve can do to actually set monetary policy, which creates the conditions, but then there's a lot of other pieces. I'm excited that we think about all of those kind of components through our research and convening.
Okay. As you've talked about COVID, it's been a tale of a very disparate impact in terms of recovery. Significant number of people, low, moderate income, people at the intersection, or people defined by race, ethnicity, gender, and/or disability, tend to be in the lower skilled jobs to a great degree. How can banks with additional financial capital, utilizing the CRA mandate, improve focus on LMI individuals in each of these groups and at the intersection of these groups? Women with disability, from racial or ethnic minorities, are the ones that have been hurt the most and are not being pulled back into employment.
Yeah, absolutely. I mean, I think that there's a lot there. So just stepping back from the CRA portion of the question for just a minute, let's think about what's happened over the last year. We know the workers that have lost their jobs have been exactly what you described. We know that certain segments of the population have been more severely hit by the economic challenges, school closures. Women have dropped out of the workforce in significant numbers to return to care, not only for children, but also for adults or for older adults that are dealing with challenges related to getting care. At the same time, many of those jobs have been deemed essential. We can't survive as a society without retail workers at grocery stores, without logistics and transportation positions helping deliver us goods so that we can continue to eat and keep our houses clean and do the things that people need to do to survive. Supporting those workers is absolutely critical. And I think that we need to think about collectively what we think it means to work in an essential job and how we value that. That's absolutely critical.
Okay. Let's go back to, I know we had questions in advance from the book club. People interested in whether or not there's a particular ratio for return on investment that organizations should consider that would make it a high impact CRA opportunity for a particular bank. Is there some ratio or calculus that might help people?
Yeah, that's a great question. And I'm not sure that I can provide a specific answer. One thing that I can say is that one of the reasons that we've always, or that a lot of our follow-up work has focused on financial instruments is I just like to tell people, and I understand CRA, and there are people that, but within the Fed, I wouldn't call myself a CRA expert. I'm seen as one of the workforce development people. But that being said, as I've looked at CRA, it's not just a grant program. I want to be clear to that. There are portions of what banks do that are just grants that provide free, low cost or free money that you just apply for. And so that's a relatively small portion of CRA. One of the things that several of the ways that that banks can comply with the CRA are through things like mortgage lending, through making loans to small businesses, to providing the financial services that they provide elsewhere in the same way, so long as that it's safe and sound. Now, workforce development hasn't been as large of a part of that, and in a lot of ways, workforce development has often operated on different models than some of those things. It's difficult to in the current model to just be able to deploy capital to a CDFI, for example, and then have the CDFI actually deploy that to organizations, which they've done. Now, I'll say that we actually, one of the follow-ups that we did is we just started to look at what CDFIs were doing. And there are some examples of places that have low-cost capital from banks that then are making loans to workforce development organizations. I'll give one example, and and just let you know that we're very close to releasing a set of case studies on these. It's not out yet, and I'm going to talk about one in Atlanta called First Step Staffing, which is a mission-based staffing firm that started, a founder started it because he wanted to help workers get connected to work. And he organically grew it and built a very, very small mission-based staffing organization where they were placing homeless workers into warehousing and logistics jobs. They were doing things like driving them to work, making sure that they were in stable conditions, able to go to work. And they hired them as temp staff. They built a staffing firm and then worked to get those workers put on permanent payroll over a period of time. And they were very successful at it. And the founder wanted to do it a lot more quickly. And they actually worked with a CDFI to start acquiring for-profit staffing firms across the country and in Atlanta to grow more quickly than they could just by talking to businesses and kind of hustling. So they grew from about 100 job placements a day to several thousand across the country, and over 1,000 in Atlanta alone, by getting lending, using the kind of the same merger and acquisition market that for-profits were using to do that and grow much more quickly and increase their impact very, very quickly. Now, I can't say for sure if the bank that worked with the CDFI applied for CRA investment, but those are the types of things that I think that we need to find ways to do more of. We need to find ways to make sure that we're not only looking for grants as a workforce development industry in terms of our CRA work, but also finding ways to connect to other investment vehicles where it may not even be a positive return, but it's providing some return.
Yeah,
that'll expand it significantly.
That's such a great lead into another question is, does the Fed or any of the other banking regulators individually or collectively, is there a website or a place, a resource where you could track such a wonderful example you just gave, promising examples of workforce development investment by banks? Does that exist?
So we at the center work to collect those often. I'm sure it's not comprehensive, but there's actually in that paper that I know got shared around in the chat, is in my slides, and I'm happy to talk more with. They actually did a national survey. So this is now maybe about 2 years old, 3 years old, but looked to pull as many of those examples as they could find. And they found some really great ones, told through the stories of nonprofits and how banks partnered with them. So there's an example from Mi Casa, an Unidos US affiliate in Denver, and their partnerships with a bank. We're going to be putting out those CDFI examples. There's other great stories of a community development credit union that started making student loans for programs that help connect people to work for people that couldn't get a traditional student loan for the things that they were looking to do. There's an example of a community college building a training facility using CDFI partnerships to convert a big old hotel into a training facility in Indianapolis. There's some really, really great examples. I think that we're hitting a point in the world where there's going to be more and more, and our goal is to collect as many of those as we can and share them, because I think that they're incredibly useful. So I'll be happy to follow up. Anytime I hear something good, I'll send it to you guys, and hopefully we can keep the conversation going on that.
Right. Another question is, and you alluded to it in your presentation, we now have what are called these long haulers, the people who have long-term consequences of COVID, many of whom are not being able to return to the jobs they used to have. Is this a potential new ripe area for bank investment in terms of workforce development strategy?
It could be. And the other thing that I'll mention on that I don't think we included in the book club. And as I was prepping for today, I just thought, oh man, why didn't we include this? But you know, you all in the disability support world probably know so much more about this, and there's so much that we could learn. I'd actually love to find a way to have a follow-up conversation. But we had a chapter about people who were suddenly experiencing a medical challenge and a disability, and what re-engagement in work looked like for them. It's certainly an opportunity that's ripe for finding ways to support people. Absolutely. And so I actually think that that's like an emerging area that deserves further exploration.
Fantastic. I'll try to get one last one in. I know we're just about out of time.
And this will be the last one, and then we're at
Okay.
time. But I just want to add to Stuart's follow-up, just so everybody knows. We do have the chapter, and we'll send it out on reducing job loss among workers with new health problems. And so that we'll make sure that everybody has that chapter as well.
The question was about specific data sets that workforce development programs, public or private, maybe should be considering more in sharing the data that would capture the attention of banks for joint investment opportunity. Any thoughts about that?
So I would say that the most important thing that you can do is tell your story. I think that to the extent that you can find ways to talk about what's happening in the local labor market, provide information about what the challenges are and what the work that you're doing to support that resolving that challenge is the most critical. And don't stop at just the data. Absolutely include the data. And there's a multitude. I'll follow up because I know that we're short on time on some more ideas and suggestions on that. But put it in the context of what's happening in your own situation, in your world, because there's a lot more than just the data. Like, take it onto the ground and put it in the real world. And I think that the last year has shown, like, as the pandemic unfolded, there was basically, economic data was always a few months behind. So especially in the current situation, it's not the only thing, but it's critical. And I can follow some more ideas.
All right. I think we better draw it to a close. We're a minute over. Stuart, I think we just have touched the surface. I have about a dozen more questions come in. We'll share those with you and we'll post online. But a great discussion. Urge people look at investing in America's workforce. The information was in the chat on how you can get to that and other material that Stuart referenced. Thank you all for joining us, and visit us.
Michael, before we close out, we just want to remind everyone about the next webinar sponsored by JP Morgan Chase on race, ethnicity, and disability, the financial impact of systemic inequality and intersectionality. It will be on April 28th, so you'll want to make sure to join us. It will be an hour-and-a-half webinar, as we also will have a panel discussion on solutions regarding that topic. Please note also that we have several questions that did not get answered, and thanks to Stuart's offer, we will make sure to get together, address those questions, and get those sent out to everyone as well. So if you have any other questions, you can please send those to ask@ndi-inc.org. And I just want to say thanks so much to Michael and Stuart for sharing this great information and creating this conversation, and looking forward to those future conversations that we can have in looking at opportunities for individuals with disabilities within creating these workforce programs. With that, thanks everyone so much for participating today.